Burns McKinney's joining us as portfolio manager, Allianz Global Investors. Burns, we won't grill you on Peloton. Good to have you back on the show. Let's talk about some of the stocks that you do like. One of them, General Dynamics. Today we've got this kind of fleeing of anything industrial and global, a pretty sharp reversal of some of the hope we've seen in these types of cyclical names. So what do you think?
Well, on days like today, when you do have, and we've been in this dynamic for the broader market for the last couple of years, very risk on, risk off, based on either what interest rate policy is going to be or what trade policy is. And today we had the treat regarding trade. You have the risk off moves, and these are the types of days where you look for some companies that may be sold off. General Dynamics got sold off with all the industrials, but some of those that maybe you can benefit from some company and more specific industry factors. In the case of General Dynamics, they traded a discount to the aerospace and defense peers at around 14 times earnings. You have a player that's been raising the dividend pretty aggressively for a long time. They're just have a consistent record of returning capital to shareholders, and they give you a really nice balance between on one side you have the defense business where they're one of the leaders in nuclear submarines and armored vehicles, things like Abrams tanks, and they have a great reputation for being ahead of schedule and under budget. But then on the other side, you also have the growth benefits of the commercial aerospace, which is the Gulfstream brand that has some of the best business jets out there. And we're in a market where you're starting to see business jet takeoff and landing activity really reach the highest it's been in about 10 years. There's very low inventories of used business jets out there they should also benefit from. And so, the way some folks kind of think about this is that investors can get the nice steady annuity of the defense business while at the same time benefiting for perhaps the upside of the growth that you get from the Gulfstream corporate jets.
So Burns, from a sort of style perspective way, this is almost kind of an example of why it still remains important to have those kind of specific stock stories, right? I mean, even though it's within an industrial group, it's doing much better today than the likes of a Freeport down 5%, or even some of the others in its area like Boeing, which is down about the same amount, but still has drama swirling on it around a stock-specific basis.
Yeah, absolutely. This is the type of market where you just sift through all the losers and you find those companies that are perhaps miscategorized. Another example of a name that we've been spending some time at and have added to recently would be a Stanley Black & Decker. It gets lumped in oftentimes with the industrials as well. People say, well, this is a tool company, but this is really a consumer brands company with fantastic brands like Craftsman, Black & Decker, DeWalt tools. One of the guys going back, as soon as I got my very first home, the first thing my dad did said, you have to get a Craftsman ratchet set. And this is something, it's non-discretionary. Everyone needs to own one. It's probably, I guess, for maybe take kind of the opposite of some of those folks who can't exactly afford a Peloton bike of us, and we can't afford that stock. But something that everyone needs to fix up their house now and again.
Hey, I might have sold you the Craftsman if you bought it in Virginia. First gig was at Sears back when Craftsman was exclusive to them. Then they sold it to Black & Decker. I look at Black & Decker stock, kind of trades similar to another name you've got, Lowe's, of course, in the home improvement space.
Sure.
So do you still want to have exposure to the U.S. housing market? Does the fact that rates maybe look contained a good thing for the housing comeback that's been taking shape?
Well, the thing, Lowe's certainly is going to trade with the housing market, but you also, again, getting back to the same theme we've had, we're stock pickers here, and we look for companies that have some specific benefits. The home improvement retailers really, they benefit from the fact that they're a little bit more defensive against the Amazons of the world because they sell great big ticket items that people kind of tend to need help with. Contractors like to go into the stores, and really a lot of what they do is not as discretionary as people give it credit for. I think that Lowe's management has pointed out that the majority of their sales are non-discretionary. If your fridge breaks, you got to replace it. If your roof leaks, you've got to fix it. And yes, certainly there could be some concerns with the housing market, but you still have the support of low mortgage rates. You have millennials really at that stage of household formation, which I think should provide some secular tailwinds. And just the overall U.S. housing stock is the oldest it's been in years, which means that there's plenty of room for folks to be having to pick up those ratchet sets and do some work on improving their homes.
Before we let you go, Burns, I want to talk another one because I like to look at what works on down days like this. We haven't had a down day in a while, so to kind of sift through and see the shape of it, you see Humana up 1%. You've generally got some outperformance from some of these insurance companies, healthcare names lately. Since October, the stock has done real solidly as it's broken to a year high and has continued to run after all the drama around what was going to happen on the political front. It's like these stocks have shrugged off those concerns now.
Well, a name like Humana, you've got one of the premier companies within their space. They've grown earnings by really twofold over the last 5 years. They have a great projected growth, and of course, there's a calculated risk reward that one has to make with respect to the threat of Medicare for all, and that's something that has at least weighed on the stock for quite some time. And really, as an investor, if you think about what's been moving of late and what's kind of sparked this rally, it's really if you sort of graph their stock price with an inverse of what Elizabeth Warren's polling numbers have been, it matches up. There's a great correlation there, whereby as her polling numbers have slipped a little bit after peaking in September, you've seen some of the managed care names all tend to benefit. But within that managed care space, I think Humana is probably one of the best positioned. They have the lead in Medicare Advantage plans, and if our ultimate goal is to reduce healthcare costs, then these Medicare Advantage plans are probably the place to do it, and this is as close as you get to a public pure play there.
All right, Burns, always good to catch up. Appreciate you joining us here. There's a high in Humana. Thank you, Burns, as a portfolio manager at Allianz Global Investors.